following the uptick in the performance of the Nigerian equities in the second half of this year. Analysts say they expect market performance to remain volatile as investors position for half-year earnings. Tijani Oladipupo, head Norrenberger Advisory Partners, joins me now for this discussion. Tijani, thank you for joining us today.
Yeah, good afternoon, Nestor. Thanks for having me once again.
Well, certainly good times for the market, should I say investors at the equities market. We saw that, of course, the index breaching 60,000 points not too long ago. And just looking at the weekly performance, right from the NGX All-Share Index to the NGX 30, down to the oil and gas, all in, mostly in the green, with significant gains recorded by banking counters. Talk to us. Where does the market go from here in terms of steam, in terms of momentum?
Oh, well, it seems like we're back to the period just before the financial crisis in 2008. That was about the last time the markets did hit this level, as you alluded to. There's been a sustained momentum of the bullish sentiment for the 6 consecutive weeks, as you're aware. The all-share index reached its highest point, like I said, since 2008, closing at close to 61 points. Evidently, all the indices are all in the green. All prices are rising. Generally, the market sentiment is very strong. We still expect to see that, barring any significant news that could potentially move the market in the opposite direction. And of course, profit taking, the market may sustain this momentum.
You're absolutely right. Well, at some point, we'll see some correction, some profit taking, of course, oscillating here and there. But talk to us about those stocks that perhaps have a good entry point at this point for investors who have been, who perhaps had lost interest or confidence in the market and are now seeing the rally and want to come in, to join in on the gains.
Of course, interestingly, bearing the metrics that we hope to see in terms of profit taking, and of course, when the market, most of the stocks are already hitting their overbuy position. Some are still on the recommended side. For instance, if we look at the banking sector, ETI still seems to have a strong hold. There's an uptick potential at about 18%. If you look at around UBA, there's similar to be also above some 20% upside potential. If you look at other financial services, African potential still looks like a strong buy. So it can still fetch some, fundamentally speaking, you can still do some 20% upright. If you look at the packaged foods, flour mills, part of those that are still strong, you could also hit some 20% upside. Others also, if you look at packaged sector again, Nestle will also do some 20% hit or take. Dangote Cement, WAPCO, those will do between 50 and 31% of that potential in terms of fundamental, bearing others. In telecoms, of course, no gainsaying. MTN is still strong. ISL is still strong, although the own margins may just struggle around between 10 to 12%.
Now, usually we usually would see a focus on the large caps, the blue chips. How about mid caps? So are there mid cap stocks that are on your radar that investors can look towards, or even penny stocks? I know that's one conversation that we do not have enough of.
Interestingly, yes, you agree with me. As a time of bullish session like this, similar to what we have around 2007, 2008, just before the financial crisis, these are times the really very bullish sessions where even the penny stocks, mid-sized stocks are all gaining. If you look at the likes of livestock as we speak, the yearly returns close to over 200% returns already. So speaking to mid-sized stocks, you can see the likes of John Oates, it still have some upside potential. Year to date, it's done some for over 40%. If you look at the likes of Transcorp, it hit some over 200% comfortably. The likes of Boafood, Calgary, the mid cap, and then of course, if you look at the penny stock side too, stocks like Golden Guinea has done over 100% conveniently. NASCO Allied, Nigerian Food, PZ Unilever in the mid cap as well. So, like I said earlier, it's a really very bullish session, and so you see that if besides profit taking, and then of course the market reaching some of the stocks reaching their bought positions, some of these stocks are actually having so much potential in this kind of market.
Certainly a rising tide that's lifting all the ships right at the market. Talk to us about your forecast for trading for this week. What stocks do you have on your radar, and what are you telling your clients in terms of how what stocks in terms of rebalancing their portfolio, because this is the time where portfolio managers rebalance their portfolios, take out some stocks and put some back in. So what are you advising your clients?
A lot of time, yes. First because it's H1 results. PMs will start putting up their H1 result. There will be a lot of profit taking in the next couple of weeks. But of course, there are still positions that investors can take. Like I mentioned earlier, right from the financial services to the agri sector, still put investors can key in, whether institutional or individuals. Some still have very good fundamentals. Quite a number of them, but of course, at this point, if the market hits sessions like this, we often ask investors, well, while doing rebalancing, you ensure that you're still doing some profit taking, because of course, if you take in the last 6 weeks, the consistent consistent surge in the market, a lot of profit taking is really eminent, and investors should also take advantage of that while also rebalancing their portfolio.
All right, thank you so much, Tijani, for talking to us. Appreciate your time on the show today. Well, that was Tijani Oladipupo, Head Norrenberger Advisory Partners.